Today, we're diving into some hot topics. I am Lisa J. Stocks, and I'm here with my co-host, Prez, the investor. Prez, how are you today?
I'm great. How are you?
I'm good. Let's put our names up. I forgot that. Just in case someone's new here. There we go.
Good afternoon to the chat. I see Fast Eddie on my side. Good afternoon, Fast Eddie. Welcome, man. Everybody be sure to hit the like button. If you have not done so already, subscribe to both of our channels. We greatly appreciate it.
Yes, and if you're ready to open a new account, use our referral links for investment accounts, as well as StreamYard if you are also a content creator. So let's get started. So Prez, you made an announcement on your channel yesterday at the end of your weekly recap of your 20-week of your YouTube portfolio. So can you share that with us over here also?
Uh, sure, I'll share it. I was gonna say, nah, y'all gotta go watch that video, but
Oh,
but anyway, I will be starting a new dividend portfolio. Kind of undecided whether I want to do $5 a day or $10 a day, but I'm leaning more towards the $10 a day side just to get that portfolio built up a little faster than the one I'm sharing on YouTube.
Okay. So I'm springing this on Prez. Oh gosh, I'm sorry. Listen, guys, you're supposed to be subscribed to both of our channels. You're supposed to watch a video, a live. You know, we have other content other than Sunday. So check us out throughout during the week. But I don't know if I should go on to my next question because it doesn't seem like you want to talk about this.
What's the go? You can ask the question. I don't.
Okay. So you shared that VOO is going to be an investment that's going to be in this dividend portfolio. So I
Yeah.
wanted to ask you, why did you choose VOO instead of SPLG? I also invest into VOO into my portfolio. So I didn't know about SPLG. I am not inclined to start a new position there, but I wanted to know your thoughts because I get comments saying like, why VOO? Why don't you invest into SPLG? So I wanted to hear you who's starting out fresh, new 2024, why you chose VOO.
VOO, one reason simply because I don't own it in any of my portfolios and I always wanted exposure to it, but I wanted it to be even as far as the when I actually started the position equal to VTI. You understand what I'm saying? So that's the only reason why I haven't had it. It's like it slipped past me when I was first getting into the investing space, and I automatically gravitated towards VTI over VOO. So for that reason, mainly is the reason why I'm starting this particular dividend portfolio off with VOO. But actually, I'm gonna have SPLG in that portfolio as well, just on a higher level of the pyramid. So that's kind of a little bit of a spoiler.
Oh man, I'm over here popping, springing stuff up on Prez.
It's okay.
You could have saved that because I know I didn't tell you about. I was adding this as a, just a little intro as we get started, letting people roll in. So, with choosing VOO, do you feel like because it has a longer length of history and because of the particular house Vanguard that it's with, are those other elements that made you gravitate towards VOO?
Mainly because I wanted just direct exposure to the entire S&P versus the overall stock market, and that's data reasons why I wish I would have been investing into VOO as well as VTI in the beginning. And this is a chance for me to start fresh with it being the primary base of this portfolio.
Yeah.
It's just for that reason alone. It's nothing extra or anything like that. It's just for those reasons alone.
Mm-hmm. And I think the OO expense ratio is 0.03 and SPLG is 0.02. But when you weigh that against the expense ratio, it's pretty much the same because you're getting, obviously one being in the 60s per share and the other being 400. I really do not see any significant difference, but some people do. And I just wanted to hear a little bit about your thought process there. Now let's dive into the weekly summary. I think first we'll go over the week that's behind us last week, and then we can talk a little bit about the upcoming week. So on Thursday, Roaring Kitty, aka Keith Gill, announced that he was going to have a live stream on Friday midday. He was a little late. I know I was out and about picking up my daughter from school because she had a half a day, and I had my phone hanging from my rear view window trying to tune in. So what are your thoughts? Because this Prez usually makes most of the agenda and the topics for the week, guys. So Prez, what are your thoughts on what happens with GameStop? He is the main investor into GameStop. So what are your thoughts on that whole situation? Were you watching? Were you one of the 500,000 people watching? Tell us, what are your thoughts on this situation?
I actually did manage to tune in just simply because I was curious, like as to what his presence was going to do to the actual price action of the stock. Like I said, I'm not a player in this game at all. I chose to basically sit on the sidelines and just watch. It's like a fun show. It's like entertainment to me as far as in the actual trading and investing space. So I tuned in for a little while. I'm like, he's not really talking about anything. And I feel as though because the institutions and things of that, people of that nature, they already knew what he was going to do beforehand, so they got their money a little bit longer than his, so they purposely pushed the stock down because you have short sellers that are making it publicly known that they're short in this company and their reasons why. So that's basically what I saw happen. As soon as he went live, the share price just plummeted. I'm like, wow. So much for a pump fake. But
Yeah,
yet they want to blame him for manipulating the stock. You understand what I'm saying?
yeah, that was a disaster. And every time it gets a halt, I think it's 5 minutes before it starts to move again, right?
Mm-hmm.
So a disaster. The night before, now on Thursday night, if you could have gotten in and out with something before 8 p.m., if you have after hours trading available to you, yeah, that stock ran up. But on Friday, leading up to his live stream, stock price went from 60 down to $28, plummeted by about 40+%, I think. So yeah, a disaster.
And it was halted so many times. Like I was on a
Yes.
live stream Friday and I just kept flipping to it. I'm like, they halted it again, y'all. Like this is one of the reasons why I said I'm not touching it, because the game is not just, it's not fair at all when it comes to these meme stocks. So I'm really, really against, well, nothing against anybody who decides to trade it, but me, myself personally, I'm against it because I just don't, it's not fair. It's not a fair game. It's not like you trading an Apple or a Tesla or something like that. You don't see those companies being halted like ever.
Yeah, having to sit there stuck for 5 minutes and while your stock price is dropping and you want to get out, yeah, that's not cool. Who wants to be in that situation? So you sent me some notes. You also talked about E-Trade. Do you want to share anything about your thoughts on that and what potentially could happen?
Yeah, so they're basically accusing him of manipulating the stock, the share price. So they're considering banning him from using the platform. And his local state government is looking into his trading activity to see if he's been doing any type of insider trading or things of that nature, because that is against the law.
Mm-hmm, mm-hmm. Yeah, but it's weird that him and others are able to get on live TV or on YouTube and do these things that they know can impact the market. But with them halting the stock for those, I don't know how many times, I didn't look that up, how many times that occurred, it really shows that the market manipulation is real and they see it, and you don't want to be caught up in it. If you don't have the temperament for it, like Prez and I are basically saying we do not, then be mindful, because this is what could happen. So it's very unpredictable. So yeah. those large halts could lead to significant losses on your part. So, all right. Meme stocks. Any other meme stocks activity that you want to touch on that occurred last week?
I noticed AMC ran in sympathy with GameStop,
Mm-hmm.
and the same with FFIE. It made little pops in there. I was just keeping a close watchful eye on these particular companies because I hear a lot about them on YouTube itself, and I noticed a lot of people, they have the fast money mindset, so they're showing bad trading habits, in my opinion, to where as though they're making comments like I'm loading the boat and things of that nature, and I get paid Friday and I'm buying more, I'm buying and holding, and these are not the companies you would want to buy and hold long term, from my opinion.
Yeah.
So it's very dangerous. It's very dangerous when you indulge in these meme stocks. Yeah, you can potentially make a nice profit in a fast time manner, but you got to ask yourself at the end of the day, is it worth the risk that you could potentially end up losing more than you actually gain or set out to lose, for that matter?
Yeah, I'm not against trading at all if you learn and do it in a responsible manner. But meme stocks and crypto, they can be exciting, but I agree with you 100%. Risky at the same time. So have a plan, use your stop loss, and know how to navigate that if you get into it. So let's talk about the recent unemployment report and the market pullback that it could potentially lead to. So what's the update on that from your end, Prez?
Basically, the unemployment report beat expectations, causing the market to pull back on Friday. And basically, my take on it: if the labor and wage market is too strong, it could further delay the Fed's response to lowering interest rates, because the more we out here as consumers spending, we're actually adding to inflation. And I don't know if you guys have noticed or not, but inflation it's still been coming down, but not as fast as the Fed would like to see it. And it's even had periods of time where it ticked back up just a little bit, just slightly. So that's just something to keep an eye on right now. We have some important data coming up this week with the CPI, and then we have the FOMC meeting this week. So the market could be a bit choppy leading up into all of this data being released. So as a trader, just something to keep an eye on. Now, if the market so happens to take a nosedive, it could be a good buying opportunity or starting point for someone who isn't yet into the market yet.
Mm-hmm. So yeah, you're touching on the week ahead. So I pulled this from Twitter. So this gives a breakdown of some things that are coming up in this week of this upcoming week. So as Prez just mentioned, the CPI and FOMC are going to be on the same day, and the PPI inflation data is also going to be coming out. Excuse me. On Monday, Apple's WWDC, which is the Worldwide Developers Conference, is going to be held tomorrow morning at 10 o'clock. And so with that, we'll get to see what upgrades and updates and AI technology and implements that different changes ahead for Apple. So we can see if that impacts the stock and see how investors' sentiment is about Apple moving forward. NVIDIA stock split is also going to be in effect. I am not able to see it in my app, where the only account, my Webull account, is the only place I currently have NVIDIA. Are you able to see the stock split yet on your end, Prez?
No, I'm not. I'm
No.
guessing it'll happen about 4 a.m. in the morning.
Okay. So I was looking on Twitter and on, I think, I forget what that other platform is, the one that's linked to Instagram, that some people are able to see it already. I think even Shalise, Mommy Trader, was sharing that she can see it. I'm not sure what platform she holds or what brokerage company she holds her NVIDIA, but I know some people can see it, but not me. And on another thing happening this week is Tesla shareholder meeting on June 13th. So anything were anything else you want to highlight that's happening this week or that you had on your radar? I looked at the earnings whisper calendar also. Not too much that excited me. What did you think? Any earnings that you had your eye on or that you wanted to share?
I haven't even had a chance to even look at the earnings count. I normally look at it like right after we end this particular stream we're on right now. So I haven't even had a chance to look at the earnings calendar as of yet. Is no real earnings of any of my long-term investments that they have already come and gone for all of my long-term investments. So I'm really not too particularly immediately interested in the earnings for the rest of this quarter. I'm basically waiting for next quarter to come up. But
Yeah.
I will continue to post that screenshot of the earnings calendar for anybody who likes to trade individual companies based off of earnings. I personally don't do it because a lot of these earnings, excuse me, are reported either before the market hours or after the market closes. So I'm not allowed to trade options during those hours. So unless I plan
Mhm.
on buying the actual shares, I'm not gonna trade earnings.
Okay, I see a few comments here. Someone's sharing that on Schwab, they can see that it's $120.88 for Nvidia. And Dee said that she's seeing her split already.
Okay.
But yeah, as I said, I'll probably make a video tomorrow and share with you guys what my Nvidia stock is looking like. I do not have much in my portfolio, but I will share what it is looking like. And Nvidia's had not three, I think at least 6 stock splits in the past. And at least after the last 3, the stock price pulled back after the split. So just a little bit of what's happened historically. And you can use that to gauge what you think may happen this week. I would think that the same will occur. So you may want to give it a little chance to cool off and then assess what you want to do going forward. What do you thought? Any thoughts on that, Prez?
I'm expecting a pullback as well. I'm actually kind of sort of like praying for a pullback because this is my week to work on level 2 of my YouTube portfolio. So I'm looking to get it as low as I possibly can. I'm even thinking about considering just keeping that $5 for this week for Nvidia off in my buying power until I get the pullback that I'm looking for. But then on the other hand, I don't want to take that risk and miss out on the opportunity of the price it is now.
All right. So
Kind
will
of
you be
like
watching?
it's kind of like how we were talking about not wanting to hurt your average. It's kind of like trying to attack my brain a little bit. But I think I'm gonna go ahead and just continue to dollar cost average into it, like I stay on schedule.
All right. So I guess that's another thing that we had on our agenda is even though the market is still overvalued, needing to cool off, we do not stop dollar cost averaging into our investments that are, already chosen, set that we're building into. So can we talk about why dollar cost averaging is important, especially in volatile markets?
From my own experience, it basically gives you the best possible price that you can get for whatever asset it is that you're investing into, especially if it's a great company, a nice blue chip company with good financials and room left yet to grow, or either they're paying a nice dividend and they don't have a lot of debt. So it's you limit your downside risk for one and volatility, and two, you get to accumulate over a period of time versus you wanting to get rich overnight. We're looking 10, 15, 20 years or longer down the road. I will continuously say that over and over. It's a marathon at the end of the day, not a sprint. So that's why I will continue to stay on schedule and dollar cost average, no matter what the price is.
All right, all right. So Neo was sharing here that Fidelity bought 115 million shares of Nvidia back in 2001. Yeah, I don't know what the date was, but I was talking to someone recently and they were talking about when Nvidia was $5 a share. So if
Wow.
we only knew, if we only knew.
Yeah.
Like we could say about so many other things, but Nvidia really has been a beast as far as its growth.
Then
So,
another one to put on the radar is CrowdStrike because their into the cloud space. They're like one of the main leaders in the cloud storage space. So that's another one you guys might want to just put on your radar and keep a close eye on.
All right, so I'm looking at my notes. Did we cover enough as far as the FOMC meeting? Anything else you wanted to share on that?
Not other than I expect the market to be range bound until all of the data is released and the Fed decides what decision he's going to make, if he even makes a decision. So that's just, don't expect to find any decent trades until then.
Don't expect to find any decent trades. Can you elaborate a little bit more on
as far as if you're trading the SPY or QQQ for that matter, the two main tickers that I trade, like the only two tickers that I trade, like I'm expecting them to be a lot of choppiness and not
just
no
sideways, not okay.
Unless we get some sort of bad news, then I'm looking for a breakout to the downside, and I love playing the downside, so it doesn't matter to me. But I'm not expecting any breakouts to the upside really, unless we get some really, really awesome news.
All right. So from our notes, anything else that you want to cover before we just kind of chat with take a look at the questions in the chat? Did we cover what we had on our agenda?
I believe we did. We covered everything. Yeah. I believe we did.
This is a first. We're getting through our agenda in 20 minutes. What is going on?
I see a question though. He was going to ask. He wants to ask me and you. Can we talk about how we developed our investing strategies? How long did it take? How did you decide this is the strategy I'm choosing? That's a good question. I got to think a second.
Strategy. I don't know. Okay, so I kind of fell into investing as far as my 401k, because you work, your human resources department says, hey, this is what we have, and it's presented to you. And then from there, you decide, am I going to participate or not? I decided I was going to participate. I've been working full time since I've been 19 years old. Did I have an understanding of what I was investing into? Was I checking on the performance regularly? No. In time, I got in tune with that and I did better. And as my earnings were increasing, as I changed jobs, I then was increasing my percentage that was going into my 401k. So that was the start of my investing. I would say it was only maybe about 6 years ago that I became more involved with paying attention to my 401k investments. And I had changed jobs a couple of times. So then I wound up with some IRAs from 401ks that had to get transitioned. So all of my retirement accounts, I then became more mindful, and I had to get an understanding on paying attention and knowing the growth and knowing if I was on track for retirement. But then after I got laid off for a second time, had done a year of working in a contract position, and we were going into lockdown. I bought my first investment property. My life was changing, and I was kind of seeing a vision of, I don't have to just work for someone else until I'm in my late 60s, retire. That may not be the path that I want to continue on. I saw how it is being laid off, having to struggle with going out there and going through all these interviews. And I definitely didn't want to have to work a contract role again. So many elements were weighing on me. So what I did was I also made a plan for myself and said, I have to have additional investments for early retirement. I want to create my own path, my own opportunities to potentially retire early. So with that, I wanted to know how to invest for myself and for my daughter also. So some of these elements built into my strategy. And I think I've become a little bit more conservative investing into ETFs, index funds, doing my research on the individual stocks that I decide to add to my portfolio. And that's been my journey so far. I don't know if I'm answering the question in the way that you expected, but Prez, did you have a little time to gather some thoughts on Neo's question?
Yeah, so I basically how did I develop my strategy? Like I studied the minds of a lot of great investors like your Warren Buffett, like names like your Peter Lynch, and I've read a lot of different, well, audio books. I've listened to a lot of different audio books that pretty much break down a lot of their trading and investing strategies. And the rest was pretty much trial and error, me trying things out and seeing if I liked the results. And if I didn't, then I would abort mission and try something different. That's basically how I developed my strategy. And it took me about maybe 2 years to find a strategy, an investing strategy that I could stay consistent with.
All right. So someone's asking the question about they're considering buying 10 shares of American Airlines. What are your thoughts? Do you want to share any thoughts on that, Prez?
I look at a company like that as a trade, maybe not a day trade per se, but I would look for the low points as far as the studying the chart is concerned, and I would try to buy low and basically sell high. I wouldn't hold any of the airline companies long term, not me personally.
Yeah, the only I would say, something similar to like a cruise or airline company that I ever held in my portfolio as an individual stock was JetBlue. And yeah, I personally I'm leaning more towards AI and technology, pharmaceuticals for my individual companies that I think I will add. I don't have any plans on adding anything in that type of that realm of airlines or anything travel related. It didn't do well for me in my one experience. But like Prez said, you have to do your research and see if that fits into your strategy. 10 shares, I don't know how significant that is. I'm not sure what the stock price is for American Airlines, but I would say I'm with Prez. Wouldn't be an investment choice for me on any level.
I basically look at companies like that in those particular sectors, like your airline sector and your transportation sector, and the cruise lines and things of that nature, as a seasonal type of trade. Like when I feel as though the company is right when business is about to start booming, towards the late winter into the early spring, then I'll start looking at companies like that for short term swing type of trade. But other than that, I wouldn't hold any of them long term. Just my personal preference. It's nothing against them, but just my personal preference. I don't see much room for those companies to grow.
Why not is asking for any resources, books, articles that to help with reading charts specifically. Any insight on that?
I can't even think of any offhand. It's so many. I can't even think of any right offhand. Um,
Well,
yeah,
maybe if we could think of it, we could.
no, I don't think that even speaks on charts for real. That's more so trading psychology. It's more psychology than actual charts. Like you can just look at different chart pattern diagrams and study those and try to identify them when you actually looking at different ticker symbol actual charts. That's how I learned about the different candlestick patterns and things of that nature. I just looked at a actual chart of the different patterns and tried to memorize as many as I can and identify them as I go along, as I'm actually watching the chart, take place during the trading hours. Now, it's more psychology than anything else. You is when it comes to trading, it's psychology and risk management.
I think Tate was tapping in on what we were saying about the airline stock, saying that those are not something for the long term. So Big Hero also shared that the airline stock is $11 a share. So it sounds like it'll be a small portion of his portfolio, 10 shares at $11. Nothing significant if that's something that you want to dabble in, but look at the performance, look at where you think that company could go. If you're going to be holding it with no stop loss and thinking, what potential it could have for you. Because I mean, personally, I do have like Target and Disney in my portfolio. Sometimes I'm going to turn off my camera for just 1 second. Okay.
All right.
See if I can do a little quick repair here. I was saying Target and Disney, I have them in my portfolio. In retrospect, did I need to add those companies as individual stocks? I really don't think so. I feel like they're going to turn around. I don't think that they were necessarily bad choices, but at the same time, could I have just put that money into Apple, Nvidia, Amazon, something that just had a smoother transition? I think I could have, and not necessarily added those as individual stocks. But I don't need to have I'm a person that I think I try to keep my portfolio simple when it comes to the individual stocks. I don't think I can manage trying to keep track of, let's say, 20 or 30 individual stocks in my portfolio. I don't see the necessity of it, but everyone, you are the person running your portfolio for yourself, for your children, whoever you're assisting with investing. So that's a choice that you have to make. Prez definitely has many more positions than I currently have in my portfolio. So Prez, what are your thoughts on that? And I also want to take a look at Marlene's question here once you share on that.
I totally agree with what you're saying as far as you don't need a whole lot of individual companies. You can do a lot better performance wise with just keeping it to a minimum, especially if you're just starting out. The reason why I have so many in my YouTube portfolio is because I can pretty much give people a visual on how to, if that's something that a route that you wanted to take, those are those steps that are needed. You have to keep everything properly allocated. So that means the ones you really want more of, you're going to have actually less the more companies that you decide to add to your individual portfolios. But best believe this new dividend portfolio is only going to be about 5 different positions total in this particular portfolio, just simply because I would like to build up the actual share size of these positions to acquire more dividend payout. That's my whole take on as to how many positions you should have in your portfolio.
Okay.
5 is an awesome number to have.
All right. So Marlene was saying, what helps you make your decisions when it comes to ETFs?
How many companies that are actually in the ETF? That's one. The expense ratio, that's two. The the overall share appreciation over the 5 year, 10 year span, that's three. Let me think of another one. The longevity of the actual ETF, that's another factor that I factor in. I try to keep it kind of simple as far as trying to explain this to you in detail how I and choose the individual ETFs, but those are the main key points that I look at. Just those, I keep it simple as far as that. And who is the actual fund manager? How many assets does this fund manager actually manage in their overall portfolio from a company standpoint? Like Vanguard, they're one of the largest asset managers in the world next to BlackRock. So I lean more towards the Vanguard ETFs versus any of the others.
Okay, I agree with everything that Prez just shared. Yeah, definitely. Um, I think that those are all points that I would also agree with. And expense ratio, I think that some people are really not factoring that, especially when you're getting exposure to pretty much the same thing. Why some people are gravitating towards, say, for instance, the SPY or QQQ or QQQM, when you're getting high tech exposure in something like a VOO or something, or a different ETF that has an expense ratio that's a third of the cost. But to each his own. You have to figure out what works for you. And of course, when you have, I've seen people investing into things that have a high expense ratio and a low dividend yield as compared to something else. So it's like you're going to pay this much for fees and get a lower dividend payout. It just doesn't work. I don't see what their thought process was. But if you factor in the points that Prez just shared, I think that you can use your judgment in a better way to decide on what ETF works well for you and what you want to have exposure to. There are so many, and you can see, what overlap they have. You can make comparisons. There are different apps and systems that can help you do that. And yeah, I invest into both VTI and VOO. And yes, there's a lot of overlap, and I don't mind. So
they're basically the same. They're basically the same thing. And there's no need to try to overcomplicate things when it comes to choosing an ETF. It's like you kind of like the I'm trying to find a good analogy that I could use as an example. Imagine yourself in a buffet and you're like, I want to try this, I want to try that. Imagine you in the stock market, you want exposure to this company and that company. Okay, you can really narrow it down by just simply buying something like a VTI or a VOO. You have multiple companies. Like VTI is almost 4,000 companies in one basket. So you got exposure to American Airlines, you got exposure to Disney, you got a little bit of all of that inside of that one ETF, and the volatility is limited.
okay. Okay. All right, Prez. Prez, I need your help.
What's that?
Well, what else are we chatting about today? Let's take a look at the chat. Do we have any other questions that we want to cover? Thank you guys for sharing the questions and chatting, and because that's what brings engagement to our live stream. Please, if you haven't already, if you're on your phone, take a second, close the chat, go hit the thumbs up, come back in, chat with us some more.
Which tool do we find most helpful for comparing expense ratios and dividends? I just simply, I don't even use the tool. I just go into them individually on my investing platform like your Webull or your Moo Moo or something like that. I go and I physically write things down on paper and compare it like that. I'm old school. I keep a I keep a notebook nearby, so I can write notes down and compare different price figures and things like that, number figures and things of that nature. I don't use any different any special tool or anything like that, because a lot of these tools and indicators and things like that, they want you to pay for their services, and I'm trying to cut as many expenses as I possibly can. So sometimes you just gotta put that footwork in and really do your research on pen and paper versus looking for a magic indicator or a magic tool or something like that. You got to actually do homework like you're in school. It's your personal finance at the end of the day, and you should take charge of it.
Yeah, I don't really use anything. I know I do use etfrc.com. It's the ETF Research Center. That is, and I just have the free version, and I use that for comparison of ETFs. But as far as just looking up an expense ratio, I do what Prez just was describing. Or if it's just one element of a stock, I do use my Chat GPT or what is the other one called? I have both. I have the two apps on my phone in addition to, on the computer, that you can just do a quick co-pilot. I have co-pilot and Chat GPT. So if you have a quick question, you can just say, hey, what is the expense ratio of these three funds? If that's an element that you want to do research into, and then you can then prioritize the three and dig deeper. But yeah, like Prez is saying, I'm kind of old fashioned. Obviously, we're on the computer, but I have notebooks, pen and paper all the time, where I'm, just figuring out things and just making a plan. And then from there, you can make a decision. But yeah, I do that a lot.
That's one of the most important tools, pen and paper. I see another comment. Thoughts on cover call ETFs. And that's something I would like to dabble into once I have a much larger trading account. but I would keep those actual shares in my actual trading account versus using that as a long-term investing strategy. That's more of a shorter-term trading strategy for me, in my opinion. And it would be something like the SPY or QQQ because they're more volatile and they have daily expiration dates, to where as though I can, reap my benefits of collecting premium a lot sooner than selling cover calls on a slower moving ETF like a VTI or VOO. It would be something like one of your higher expense ratio type of ETFs simply because they move faster. So that's my take on cover call ETFs. It's an awesome trading strategy that's less risk, lower reward, but you need a lot of capital to do something like that because you would need, say, 100 shares per contract that you're selling.
Okay. Let's take a few more questions. So you were just talking about Michael's comment just then?
Yes.
Okay. All right. So let's move down. Yes, D. Yes, D. We are old school over here. I use something. What's next? Okay, Prez, I'm over here. What are your two? Here goes a question. What are two of your top dividend paying stocks?
Well, me personally, I'm just actually starting to gravitate more towards dividend paying stocks. I was like strictly growth companies because I like the share appreciation. It kind of gives me a nice euphoria that I've done dollar cost average throughout the bear market. And now that we're in a bull market, I get to see those nice percentage returns, unrealized returns, because you have to actually sell these stocks to see the returns. But I don't plan on selling anything as of yet, no time soon. So why not, lean more towards into dividends? I have a nice amount of growth companies in my portfolio. So I'm looking forward to receiving those dividend payments, and I am willing to share because this is a small portfolio project that I'm just starting out.
So we have another comment here. SCHD, keep it in my Roth. I'm limited to 8,000 a year. I moved it to my taxable account. I really don't want to speak on the tax implications because I'm not familiar with how that may impact you. I think you should reach out to a tax professional with that. Anything you want to share on that, Prez?
Yeah, I always consult a tax professional because the last three people I want to, be in bad favor with, that's the I, the R, and the S. So I always consult a tax professional when things of that nature arise as far as my personal journey, because I just don't know. It's beyond my pay grade. So
So I definitely feel like I am responsible and try to be prepared for what may come up and probably over prepared. If anything, decide if you're going to do trading, if you're going to make moves like that, set aside a larger percentage than you potentially may need, and then get the answer. Because I'd rather be over prepared than to be short and have a significant tax implication. But I'm not afraid to use my portfolio to trade, to gain in that way, and then move my gains into, say if I do a trade, then move my gains into a basic ETF, one of my long-term holds, something like that, because it's my way of earning money. It's different than going out here and working overtime. Whether you're working overtime, taking extra shifts, doing, another side job, Uber Eats, whatever your side hustle may be, it's extra earnings. So I'm not going to let, when you earn more, you're going to have to pay more taxes, is what I'm trying to get at. And I'm not going to let my way of earning more money, or if potentially I do have to sell a stock and take on the capital gains or whatever, I'm not going to let that turn me off to investing, because it's just a part of what we all have to deal with. We have earnings, we have to pay taxes. So I sometimes get people like saying that some people that would not be opposed to working overtime, talking objectively about what's going to happen to you with your investments. So it's like they're afraid to earn money in that way, but they wouldn't be afraid to take on extra manual physical work. So
Right. I look
okay.
at it as though trading, I have it's less that's less time I have to actually sweat for out here in the workforce. I could just sit in front of my computer for a couple hours and make a day's pay and off, do whatever I want to do the rest of the day. So that's the good upside of it. And I worry about the taxes when that bridge comes. So I just make sure I manage my money properly. So when the IRS come knocking, I already got the check waiting for them. I just
So
set up my account. Go ahead.
I was just going to read the question. So Sweet Thumb is sharing that they have a Webull account already. They're looking at Moo Moo. Do we have anything we want to share about the differences, preference between the two platforms? I have both platforms. Do you use both?
Yes, I do use both, but I lean more towards Webull because I'm actually able to use a cash account versus a margin account, to whereas though I can kind of sort of get around the 3 day trading rule, to whereas though the 3 day trading rule, you have to get around that the one way you have to have at least $25,000 in your account at all times, and you can day trade as much as you want. Now versus a cash account, you can only trade with the funds that are settled. And since we just was speaking last week, they just made the T+1 rule in effective. You can actually buy shares and or option contracts and today and sell it today, and by tomorrow those funds are accessible to you for you to use again. So that's the main reason why I lean more towards Webull over Moo Moo. Now Moo Moo has a lot of different tools that you can use, like indicators and news reports and analyst ratings and things of that nature. So that's the main reason why I use Moo Moo. Now, what my plans, what I'm going to eventually do with my Moo Moo account, that's going to be more so a longer term swing trading account versus a long term investment account. But both of them are trading accounts, in my opinion. But you can use both as investment accounts as well.
Oh yeah, definitely. So with Moo Moo, do you like it for? I love it for research. Dividend calendar, all of that. So any insight you want to share on that?
Yes, as
As
far
well,
as
as well as
the
the
tools,
trailing stop loss. Have you ever used the trailing stop loss, or do you always do it manually because that's the way you kind of got started doing it?
I do it manual because I'm stuck in my ways basically, and I'm allowed. I think I'm a little better with. I don't know. It's just my own personal bias. I prefer to do it manually versus allowing the computer algorithm to do it for me. Now I use Moo Moo more so for the tools, and I use Webull because it's more user friendly for me. That
Yes.
was my personal preference. Is why I lean towards actually using my money for trades on Webull versus Moo Moo. I just use Moo Moo mainly for the tools. I do have some funds there, but it's nowhere near as much as I keep in Webull.
Yeah. So I use both. I have on Webull. I've had my Webull account much longer. My Webull account, I have my growth portfolio there. What I started doing on Moo Moo is primarily my dividend portfolio. I like them both. But if I'm going to research, I or go for a dividend calendar, certain things, PE ratio, I go to Moo Moo. But if I jump from my different platforms for different reasons. I like them all. I have not used the feature of the trailing stop loss like Prez. I think I kind of have gotten used to doing that manually, and I think they're both really good platforms. But there are differences and elements. If I had to choose one, I don't know which one I would choose over the other. I like the simplicity of Public and Webull for certain things, but I like the detail and the tools for in-depth analysis that you have on Moo Moo. So I like having the flexibility of going to them all.
Also on Webull, I use my Roth IRA account for trading. That's like my main Roth IRA trading account. I don't know if you guys know, but I use a Roth IRA, one at Fidelity for long-term investing. These are my buy and hold forever type of ETFs and companies. And then I have a separate Roth IRA that I no longer have to contribute to. because it's already at a nice amount of capital to where as though I can trade with that and grow that tax free until I'm the age 59 and a half, as well as have my long term stocks that I own, buy and hold forever in my Fidelity Roth IRA account. That's just another way of getting around paying a whole lot of taxes out. I'm not expecting to use any of that money I'm making trading in that account no time soon. So that's a nice lump of sum of cash that I can possibly grow when I'm at the retirement age. I just have all this cash as well as all of these stocks. So it's a good strategy that I stumbled on by accident and stuck with it. That's something that I did by accident when I first opened up my Webull account. I didn't know what I was doing, so understand. It happened by accident, and once I learned what I was doing, I said, "Oh, this sounds like a good idea for me. Let me keep doing what I'm doing." I see a question that somebody asked me, "Have I changed my stance on Palantir?" I still think Palantir could possibly come down and retest the $19 range as far as the trade is concerned. And until then, I probably won't trade it as far as buying the actual shares. Now, I do have it in my YouTube portfolio. I'm willing to take that risk on as far as it being a longer term hold. That's why the allocation is so small at just 1% of that entire portfolio. So no, my stance on Palantir still haven't changed. It's actually leaning more towards the longer term hold side of things versus it being an actual trade. But I can do both now. I'm able to do both.
Okay. Any other questions you see that you want to touch on before we start to wrap things up? I don't know. I'm not sure what this question is means. Oh, I think they're asking if we have any international exposure ETFs. I do not.
Me neither.
No.
Simply because of geopolitical tensions and things of that nature. And last thing I want them to say is say for example, I'm investing in the Neo, which is a ADR type of company, to where as though it's basically a IOU when you buy those shares. Like, we owe you this amount if you decide to sell it, to where as though they can decide to pull Neo off the United States stock market and you just get paid out whatever the share price was, just giving that as a scenario. So that's why I'm really skeptical as far as to invest in long term into something like Neo or Alibaba, or one of those foreign type of companies that's listed on the United States stock market.
So, investing, it's all about your long-term perspective, and there's so many elements to it. And as we work through all these different things, Prez and I are sharing our journey with you guys. Thank you for subscribing. Thank you for tuning in. We will continue to be here with you on Sunday afternoons. Prez, any other questions that you're looking at over there?
I'm just double checking.
Okay.
Someone says, can you move stocks from a traditional IRA to a Roth IRA? I've never done it before, but I hear that you can. Don't fact check me on it. I've never had the desire or opportunity to do so, but I believe there is a way that you can do it. You would have to check with someone that's a little more well versed with that particular question, but I do believe that you can do it.
Yeah, contact your brokerage company and ask. I know I'm with Fidelity. That's where I have my retirement account. And they are great when I call. But another thing with the person that was asking about Webull and Moo Moo, another aspect is their customer service. When I call Moo Moo, I always get someone on the phone. I think some people have this, they think that if you're using these type of investment apps, that you're not able to get through to people, and the customer service is not real, or it's not as secure as having using a larger brokerage firm. I feel totally comfortable when I call Moo Moo as well as Webull. Those two, I can definitely say when I call, I can get someone on the phone. I can get someone to call me back if needed. I do get the assistance that I need when I'm having an issue or just have a question that I want to work through or have a better understanding of. Anything on that, on customer service with different platforms, Prez?
As far as customer service, my favorite is Fidelity.
Fidelity, yeah.
That's where I hold majority of my, assets at. That's like my largest account. It is in Fidelity. Now, as far as Webull and Moo Moo, I've never had any issues as far as customer service is concerned. They always respond in a timely manner, whether the matter is resolved or not. At least they took the time to respond, and they would, give me an indication that they're going to look into it. And they always come back with a follow up as to what the actual result of the matter was. So I've never had any issues. I don't really have any customer service issues to begin with anywhere, period, from out of any platform that I use. It's very rarely was it whereas though one platform may not accept my bank or something like that. So whereas though I want to know why you don't accept my bank. Understand what I'm saying?
Yeah.
Those are the only issues that I've ever had out of any platforms that I use.
Okay. All right, so I think I'm ready to wrap up for today. Thank you everyone for tuning in. I do try to go back sometimes and add chapters so that you can rewatch and check out something that you may have missed throughout the hour. And we will be back with you. I don't know what the summer might hold. Prez is going to be traveling international and leave me here, but we will try to always have something. I will connect with Prez. I was going to say if we need to even do a premiere in this time slot, I want to try to have something every week at 3:00 Sunday.
So I listen to her. I'm not traveling international unless I'm moving to Dubai somewhere, something like that. But I don't have any international travel plans in my near-term future.
Life hasn't been getting in the way, so we have been here live with you every Sunday lately. So we will try
I'm
to
okay
keep
with staying home.
staying home. Okay. All right. So that's it. I'm ready to wrap up. That was episode 16. How was this for you, Prez? Did we do a good job?
I believe that we did. I believe that we did. What y'all say,
Okay.
chat? Make sure y'all hit that like button. Run them likes up. Yeah, we need y'all to run them likes up. And to everyone who spoke that we didn't get a chance to speak to, hello. I don't want to leave anybody out. Thank you all for tuning in. Be sure to, if you haven't done so already, subscribe to both of our channels. If you need an investment platform, use either one of our links and make sure you fund it because those bonuses are time sensitive. If you just open the account and it get approved and you don't fund it yet, it's like a time window before you can receive those welcome bonuses and things of that nature. So be sure to actually fund those accounts. Don't just use the link. Make sure you fund it. What else did I want to say? Something else that I wanted to say. I don't want to make sure I missed anything this week. No, I
Okay.
think that's it. I think that's it.
Guys, feel free to comment, give any suggestions on future topics you'd like us to cover, and we will be back next week. Thanks for tuning in. Okay, bye.